Yes, good morning, everyone. Welcome to the next discussion of CF Final Audit Regular Course in 100% English delivery. So, we have reached a certain stage where we have introduced the subject, all right, in the last lecture. Then we have started the discussion of standards on auditing. Now, what I'm doing is we are discussing some basic concepts, all right, which will help you to strengthen your grip on the topic of standards on auditing, all right. In that, the first concept we are done with, and that concept is applicable financial reporting framework. We are done with this particular concept. Okay, so we had a very interesting discussion that applicable financial reporting framework is nothing but the guidelines based upon which entity prepares its financial statements. Okay, and these guidelines, as an auditor, we need to obtain an understanding of these guidelines, because when we express an opinion, we have to check whether financial statements are as per applicable financial reporting framework or not. Then I introduced the concept of fair presentation framework and compliance framework. So tell me, Schedule 3 of Companies Act 2013 along with IND AS is F for fair presentation framework or C for compliance framework? Schedule 3 and IND AS is F for fair presentation framework or C for compliance framework? Yes, sir. It is F for fair presentation framework. Why it is fair presentation framework? Because Schedule 3 and IND AS, they require the compliance, but there is also an additional responsibility on the management to give some additional disclosures, to take some more efforts in order to achieve fair presentation. Whereas cooperative society accounts, in that only the format is important. There is no other additional responsibility on the management to achieve fair presentation. So that is why it is a pure compliance job. As an auditor, when I am going to accept audit of any entity, I need to obtain an understanding of their applicable financial reporting framework. Why? Why? Because at the end, when I'm going to give my audit opinion, if it is a fair presentation framework, I can use the word true and fair view. But if it is a compliance framework, I cannot use the word true and fair view. We discussed it for last 25 to 30 minutes, a healthy discussion we did. All right. And that has been just summarized in this first 5 minutes or so. Okay. Now we are going to move ahead. The next concept is concept of materiality. Okay. Now, when I talk about concept of materiality, as an auditor, obviously, I will have to focus on material items. I cannot keep on wasting my time on immaterial items. But when I talk about material items, what is the normal English accounting meaning of that? Anything that can influence the decision of the users of financial statement. See, come on, grow up. Inter-CA students use this language that material items are important items. At final CA, come on, you need to be more specific. Material items are such items which can influence the economic decision of the users of financial statement. So in Reliance Industries Limited, you are going to focus on the figure of turnover, on the figure of profit, on the figure of net assets before deciding whether you want to invest or not. So obviously these items will become material. All right. You know the meaning of materiality in simple English, but you should know it in accounting and auditing English, that anything that can influence the economic decision of the users of financial statements. Now tell me, as an auditor, when do you think I'm going to apply the concept of materiality? Sir, concept of materiality will be applied throughout the audit, sir. When I'm going to plan and perform audit, when I'm going to form my opinion, every single point, every single stage, I'm going to apply the concept of materiality. All right. So auditor needs to apply the concept of materiality while planning and performing audit, as well as while evaluating misstatements. Now, I want you to write something with me so that you will develop the grip on what I'm going to discuss next. Everyone, please come to your notes. Please come to your notes. Write down there concept number 2, materiality. All right. So everyone understands that material items are such items the knowledge of which can influence the economic decisions of the users of financial statements. Material items are such items, the knowledge of which can influence the economic decision of the users of financial statements. All right. Obviously, the word materiality cannot be defined. Tell me, in a manufacturing entity, will printing and stationery item be material in a manufacturing entity? Do you think that printing and stationery expense is going to be a material expense? No, sir. But in a coaching class industry, is it going to be material? Yes, sir. So, come on, type it in the chat box. Materiality is a dash term. Materiality is a dash term. Yes, materiality is a very good relative term. Now, many students write the word subjective, correct? But I want you to remember the word relative. We relate to the facts and circumstances, and then we decide whether something is important or not. All right. So when I use the word relative term, it means we define it based upon the facts and circumstances. Materiality is a relative term dependent upon the facts and circumstances. Like printing and stationery in a manufacturing entity is not going to be important, but printing and stationery in a coaching class industry is going to be important. Okay. Now, obviously, auditor needs to apply the concept of materiality. Auditor needs to apply the concept of materiality throughout the audit. Right from start till the end, auditor will have to continue to apply the concept of materiality. Okay. Now I want everyone to focus. So to be very specific, auditor is going to apply the concept of materiality while planning and performing audit, of financial statements. An auditor will apply the concept of materiality while evaluating misstatements and forming an opinion. We can't just write just simple English that materiality concept will be applied throughout the audit. We need to be more specific that while planning and performing audit of financial statements and while evaluating misstatements and forming an opinion. Okay. So when I use the word planning and performing audit of financial statements, let me tell you, at final CA level, we will have technical discussions, numerical discussions. I will show you practically that in practical life, how materiality is applied. Because at inter CA level, you have done the theory part, we will do the working at final CA level. If someone is ready to share their practical life Excel sheet with me, I will show you the working also. All right. But all of that will be done in essay 320. Because when you are going to apply the concept of materiality while planning and performing audit of financial statement, that is essay 320. But when the same concept of materiality is applied at the end while evaluating misstatements and forming an opinion, this is discussed in essay 450, essay 700, and essay 705. So when you are going to apply the concept of materiality while evaluating misstatements and forming an opinion, these discussions will come in multiple essays. All right. So at the start of the audit, when you are planning the audit, when you are executing the audit, when you apply the concept of materiality, which item to select, where to perform more procedures, that is essay 320. But at the end, after you have found misstatements or let us say you have not got the evidence, and when you are trying to form an opinion, at that point of time, when you apply the concept of materiality, then it will be discussed in some different essays. All right. Okay. So everyone understands that materiality technical discussions will be done at a later stage, but everyone understands one line, that there cannot be a single definition for the concept of materiality. Correct. There cannot be a single standard rule for the concept of materiality. What is important, what is not important depends upon various factors. Correct. So everyone write down, leave one line and just write down. There is no single standard rule for determining materiality. Across all circumstances. There is no single standard rule for determining materiality across all circumstances. Full stop, continue. It depends upon various factors. And what are those factors? Do you understand the meaning of the word factors? It is so important to understand this meaning in audit subject. Whenever you come across the word factors, it means the points that help you to take a decision. All right. The points that help you to make a decision. All right. That is nothing but what? The word factors. Now tell me, come on, randomly just start typing it in the chat box, or you can also unmute and answer. Correct. Give me the factors based upon which you will decide that, okay, this is important, this is not important. All right. Tell me, give me the factors. Yes, everyone start. Size of the entity, turnover, nature of the business, nature of the entity, nature and size of the entity. All right. So one thing is very clear. Size, nature, and complexity of entity's business. And volume and stuff will come over there itself. So size, nature, and complexity of entity's business. This is the basic factor, correct? Then obviously, size of the amount, correct? Whether a particular amount seems to be important or not. But listen, every time size does not matter. Sometimes nature also matters, all right? And everyone should take a note of this even in their personal life. So obviously, size of the amount is important. But along with that, we will also see the nature of the account. Sometimes even a small amount can be a very big impact, like penalties, TDS, all right. These amounts, these are irrespective of the amounts, these accounts are such that you are worried about it, all right. So size of the amount and nature of the account. Yes, very good. So some students are replying over here. The biggest point is, yes, applicable financial reporting framework. Because whatever Schedule 3 AS tells you that this needs to be disclosed separately means it is important. All right, that is why it needs to be disclosed separately. So applicable financial reporting framework. Yes, very good. Applicable laws and regulations. Like managerial remuneration, related party transactions, these things are governed by laws and regulations also. Taxation provision. Why do you give so much importance to these points? Because they are governed by laws and regulations. Yes. Then, hello. Finally, whatever the user of financial statement wants to see, that is important. Everyone agrees to this? That whatever the user of financial statement wants to see, that is important. All right. So tell me, in Reliance Industries Limited, one of the shareholder has questioned me. I am the auditor of Reliance Industries Limited, and one of the shareholder questions me that, sir, I want to see how many samosas were eaten by Mr. Ambani and the family at the expense of the company. Because if they eat too many samosas, then it may create heart problems and the whole Reliance Industries empire can be under a big trouble. Can I say I'm going to hit this person with samosa, vada pav, whatever I have in my hand? Yes or no, sir? Yes, sir. Boss, I am here to address what is commonly important for everyone. Correct? What is commonly important for everyone? So, what should be the correct English? Information needs of the users, option A. Option B, common financial information needs of the users. Option B, common financial information needs of the users. Exactly. Common financial information needs of the users of financial statements. Correct? Because we are conducting audit of general purpose financial statements. We are conducting audit of general purpose financial statements. So whatever is commonly important for everyone, I am going to consider that as important. And then at the end of the day, whenever they ask you factors, that means the thing is dependent upon your judgment. All right. The thing is dependent upon your experience. So one point is always there. Auditors professional judgment and experience. Auditors professional judgment and experience. Correct. So these are the factors that will help you to decide whether something is important or not. At the end of the day, let me tell you, Institute has given 95 pages guidance note on the concept of materiality. Still, those are just examples. Normally, all our practical life doubts are cleared by that guidance note, but still those are just examples. At the end of the day, materiality is always a relative term. It will depend upon facts and circumstances. So tell me, in this concept, are we done with all the discussions of materiality? No. The game has just begun. I will connect it with practical life when I'm into the specific essays. When I'm into these essays, I will connect the discussions with practical life. All right. And we will do it with the numbers. Don't worry about it. Okay. This is just a starter so that you can enjoy the main course later on. So materiality, material items, knowledge which can influence the economic decisions of the users. It is a relative term. Auditor needs to apply the concept of materiality throughout the audit at planning and performing and while evaluating misstatements. For that, there are different essay numbers which I have written over here. We understand there is no single standard rule for determining materiality across all circumstances. It depends upon various factors. And these factors, don't forget in your life, because throughout the audit subject, you will see that these factors are repeated in various answers. All right. Okay. So that much I wanted to discuss with respect to the concept of materiality as of now. Now over here, everyone, this materiality concept, I wanted to do it from the textbook, but because we just started the lecture, I have a very fixed tradition. When I start the lecture, I keep on writing things, correct? So that students are warmed up. Okay. So whatever I wanted to discuss from textbook, I've discussed it over there. So you can just write down over here now notes. Otherwise, this was a very simple discussion to be done from the textbook. All right. Now look at this concept number 3. Audit evidence. Come on, these are some terms which I want to clear so that later on there is no problem. All right. Concept number 3, audit evidence. Write down, everyone. Come on, we need to brush up your inter-CA over here. So we know that auditor needs to perform audit procedures in order to obtain which evidence? Sufficient and appropriate audit evidence. Remember, everyone, that phrase? Yes. So auditor needs to perform. Only if you know these words, then I'll be able to teach you something. No? Auditor needs to perform audit procedures in order to obtain sufficient and appropriate audit evidence. Now tell me, what is the meaning of the word sufficiency? It means, come on. It means quantity of information. How much information do you want? How many papers are you going to verify? How much information do you want? What will be your extent of verification? How many transactions you will verify? So whenever we talk about quantity of information, that is always sufficiency. Great. Appropriateness means quality of information. All right. What do you understand by the word quality? Quality means relevance and reliability. See, you need to be aware about some audit words, All right. What do you understand by the word relevance? I need logical information. There should be some logical connection. So tell me, in order to verify purchases, everyone has to reply in Y for yes, N for no, very quickly. Huh? So if I want to verify purchases, can I say I will have to go across, I will have to verify the sales invoices, yes or no, sir? No. And you will not believe 5 to 6 people have said yes. Sorry for using Hindi, but I'll have to sing this. Jago, Mohan Pyare Jago. All right. So tell me, if you want to verify purchases, you will require purchase invoice, purchase order, correct? You need logical connection. Okay. And what do you understand by reliability? You will require the original documents, correct? The documents which appear to be complete, accurate. All right. So reliability means CA, complete and accurate. You will find this statement very shocking, but I am worried about the students whose English is fluent. Yes, I'm not worried about the students who are struggling with English. I'm worried about the students whose English is fluent. Because for the students whose English is fluent, what they do is, reliability means the information should be trustworthy. Trustworthy. Basically, the auditor should be able to develop trust on the information. Correct? You will get 0 for using such kind of shitty language, correct? Because the examiners are not understanding these things. So I want audit words. The person who is struggling with English, I'll tell you what is the benefit. Correct? They always focus on the professor's language and they write it accordingly. So the persons who are struggling in English, they fail not because of their problem, it is because of the professor's problem. Correct? But the persons who are very fluent in English, I'm worried about them because they keep on writing whatever comes to their mind. So reliability, I don't want any further shitty language. I want it very clear. Reliability is something that is complete and accurate. All right? Yes. So auditor needs to perform audit procedures in order to obtain sufficient and appropriate audit evidence. All right. Now, tell me everyone, whatever audit evidence you obtain, audit evidence is dash in nature. One of the favorite lines at InterC level. Audit evidence is dash in nature. Okay. Very good, Dhruvi. Yes. It is cumulative in nature. Sir, what do you understand by the word cumulative? Can I say that, boss, we accumulate information from various sources. Like, for example, if you are verifying purchase, it is purchase order, purchase invoice, supplier's ledger, payment done to the supplier, goods inward note, goods received note, correct? So there are so many things that we verify. In fact, for some items, we may take the information from the last year also. Sir, for example, trend analysis. For example, last year's contingent liability, if it turns out to be actual liability in this year. So audit evidence is always cumulative in nature. Why? Because we gather information from various sources, past experience, etc. And that is why audit evidence is always cumulative in nature. Okay. Now, tell me, when auditor is trying to obtain audit evidence, all right, do you think that auditor just verifies the accounting records? Do you think auditor just verifies accounting records? No, sir. Auditor also verifies MOA, AOA, minutes of meeting, external communications with third parties, So every time it is not about accounting record. Auditor also verifies some other information which supports the accounting records. So auditor obtains evidence from accounting records and other information which supports the accounting records. Okay. Auditor obtains evidence from accounting records and other information supporting accounting records. Okay. So now listen. A for accounting records, O for other information. You will type it in the chat box. I will give you example of an item. Tell me whether it is an accounting record or other information. All right. Journal entries, accounting records. Okay. Invoices. You will not believe students have stated that invoices is other information which supports accounting records. Now let me clear your confusion. You see, I exactly know where finance year students are lacking in their base. All right, because I've had enough experience of teaching finance year now. So what happens is that you think that accounting records is just what you studied in 11th standard, 12th standard or so. All right, that books of accounts, journal entries and stuff. Accounting record is any record based upon which the accounts are prepared, correct? So it is nothing but your books of accounts. But listen, when it comes to books of accounts, it is not journal entries. You remember in 11th standard when you used to write journal entry, you also used to write the narration, with this entry referring to so-and-so voucher number, so-and-so invoice number. So listen, your journal entries, invoice, in fact the contracts, because anything that based upon which the accounts are prepared is accounting record. Contracts, bank statements, etc. All of this is accounting record only. All right, the checkbook, the electronic transfer entries, all of this is accounting record only. But when it comes to MOA, AOA, minutes of meeting, external confirmations from third parties, all of that is other information supporting accounting records. I just want your base to be very clear. Otherwise, it creates a lot of problems. So at final CA, many professors assume that students are aware about these things, and that is where the first few lectures itself go wrong. Okay. So auditor obtains evidence from accounting records and other information supporting accounting records. I hope you are writing the examples and we are through with this particular point. Okay. Now, but you keep on answering. If you go wrong, I will never scold you. All right. So not a problem. So let us talk about this type of evidence. Type of evidence. Okay. Now, whatever evidences you obtain, it is categorized into two. Based upon the source of information and based upon the nature of information. Based upon source of information, based upon nature of information. Slowly, steadily, you will recollect. Based upon source of information, internal evidence, and external evidence. Based upon nature of information, either you observe visual evidence, or it is a written evidence or documented evidence, documentary evidence, or it is an oral evidence. Okay. Very simple English. Now, but I am worried about this internal evidence and external evidence. So I'm just going to randomly ask. You first reply. I will come to know if there is any problem. I'll elaborate further. So tell me, purchase invoice. It is an I for internal evidence or E for external evidence? Purchase invoice is I for internal evidence or E for external evidence? And the whole chat box is I. Okay. Now listen to me. You have to focus on the source. That means from where it originates. If I'm conducting audit of X Limited, if X Limited has purchased certain goods from the supplier, obviously currently the purchase invoice is in the premises of X Limited, correct? However, it originated from the supplier, correct? So that is why purchase invoice becomes an external evidence. You have to focus on source. That is point of origin and not the point of current location, correct? So internal evidence is something that originates from the entity, and external evidence is something that originates from sources outside the entity. See, if these words are not clear, how will I teach you audit subject? Because we have to do bare essays. For that, you need to be a master. All right. So internal evidence. Example. So external evidence, one example I have given. Purchase invoice. So tell me, sales invoice will be, although currently it may be with the customer, but it originated from the entity. So sales invoice is going to be internal evidence. Okay, chalo, rapid fire round. All right. Bank statements. I for internal, E for external. External evidence. Bank statement originates from the bank. Yes. Bank reconciliation statement, BRS. Internal evidence. Salary register. Internal evidence. All right. Pay slips given to the employees. Internal evidence. Pay slips given to the employees. Internal evidence. Okay. External confirmation from the debtors. External evidence. That is so simple, no? All right. Enough practice. So now you have understood. All right. Okay. So even if you go wrong, there is not a problem. You will not see me losing my temper for first 4 or 5 lectures. After that, if these concepts you don't remember, then you will see the other side of mine. All right. Okay. So type of evidence based upon source of information, based upon nature of information. Fine. Now, everyone, tell me, let us say that, I wanted external confirmation from a supplier. Okay. I wanted an external confirmation from the supplier regarding the goods that have been purchased by the entity that I'm auditing. Now, let us say that supplier is not responding. I requested the supplier, even the entity is cooperating with me, but the supplier is just not responding. Then in that case, what shall I do? Shall I skip that particular item? No. But can I say I can take an alternate route? All right. I can go for some alternate audit procedures. Yes. I can see the ledger. I can see the invoices. All right. And I can still try and verify that particular evidence. Okay. So everyone, I think you will understand this particular line. Please write down. In any auditing situation, yes, Muskan. In any auditing situation, if the intended evidence is not available, Then auditor should perform alternate audit procedures. Auditor should perform alternate audit procedures to obtain another, just to obtain some another convincing evidence. But for that, what is the English? To obtain another persuasive, that is convincing evidence. Or let me give you more English, audit English. Corroborative. That is just another word for related information. Evidence. Sometimes, you should know some words so that you are able to understand the question. For example, if the question tells you that auditor is not able to corroborate further, then you'll be like, what is auditor not able to do? Corroborate? You will not come to know. All right. So when I say corroborative means related evidence, when I say auditor is not able to corroborate further, that means he has tried his level best, but still he's not getting the evidence. All right. I'll talk about that, Ganesh. I'll talk about that. In any auditing situation, if the intended evidence is not available, then auditor should perform alternate audit procedures to obtain another persuasive or corroborative, that is related evidence. All right. Done, everyone? Yes. Okay. Now come on. Can you give me some audit techniques that we use? Audit techniques that we use? Yes, you remember that. Audit techniques to obtain audit evidence. Because we will be using these words repeatedly in our audit subject. Yeah. So we go for inquiry. We go for inspection. Yes, we go for external confirmations. We go for observation. We do the totaling and stuff. Yeah. We go for recalculations. Yes. Then the biggest technique that you are using in articleship, right? That is re-performance. Yes. I like your attitude in articleship. Huh? So you will go to the employees and you will tell them, because you know that you're not aware about everything. So you will go to the employees and you tell them, can you tell me exactly how this process is done? Yeah. Yeah. Yo. Wait, let me write down. Step number 1, step number 2, step number 3, step number 4. Now you will use the same notes that you have got from the employee to investigate. And you will take some transactions, you will go through the full process on your own. So auditor will re-perform the whole procedure from start to end, which was originally performed by the employees, all right, to find out whether there is any loophole over there. So re-performance, the word itself is very clear. And you also do this analytical procedures. What is analytical procedures? Yes, ratios, comparisons, trend analysis. Yes. Okay. I think Ganesh has studied audit nicely. He's remembering some very specific words. Okay. So these are the audit techniques to obtain audit evidence. No one is going to ask you full set of techniques. Just that we use it repeatedly in our answers. That is why. Otherwise, at interstial level, correct, we also give a code word for this. Rio. X is RIA. All right. So this is your X. So Rio's X is RIA. All right. If at all you want to remember all the techniques, not required at final C level. That is why I do not glorify this topic too much. So audit techniques to obtain audit evidence. Just that if these words are at the tip of your tongue, it helps me, to teach audit subject. Okay. Done? Done. All right. Let us go back. Let us go to the textbook and do some working over there also now. Otherwise, the textbook is going to feel very lonely. There are some points which I'll clear it from here itself. Concept number 3, audit evidence. Auditor needs to perform audit procedures in order to obtain sufficient and appropriate audit evidence. Notes. Sufficiency means quantity of the information, and appropriateness means quality. Quality means relevance and reliability. All right. Now, a couple of questions. Quantity. How much information are you going to ask for? That quantity will depend upon which factors? Let me tell you, quantity always depends upon my missus. Whatever my missus wants, I have to give that information. Materiality of financial items. Because whatever is highly material, whichever item is highly material, we need more information for that. And then you remember this favorite phrase which you used to use at inter-se level? Risk of material misstatement. What are the chances of error and fraud? What can go wrong? How much can go wrong? Where things can go wrong? Where there could be error? Where there could be fraud? We are going to have a detailed discussion on this but as and when the subject goes on. All right. And then size and characteristics of the population. So that is nothing but the size of the amount, nature of the account, all of that we take into consideration. All right. So quantity of the information will depend upon my missus. Okay. So just that these 3 points, they help you to, elaborate the answer, nothing else. Appropriateness means quality. Quality means relevance, reliability and stuff. Reliability will depend upon which factors. Oh, come on, man. It is very easy. Come on, everyone. You need to type it in the chat box. I for internal evidence is more reliable or E for external evidence? External evidence is more reliable because it originates from outside the entity. It is difficult to manipulate. So we decide about reliability based upon source of information. Now tell me, if the internal controls which are implemented by the management, their internal system, if it is effective, if it is strong, if it is effective, then can I say we can rely upon the internal records? Yes or no, sir? Yes, sir. So controls. Then written evidence is reliable or oral evidence? Sir, written evidence, sir. I don't even want an answer. Written evidence, correct. So nature of information, correct. Then tell me, I will just ask you a very common sense based question. Inquiry is more reliable or inspection? IN inquiry, IP inspection. Everyone is typing I. What is this? I for inquiry. I for... All right. Okay. So obviously, correct. So inspection is more reliable. So the circumstances under which it is obtained, all right, the techniques that you're using, all of that is going to decide about reliability. That is very common thing. So I'm not glorifying that line too much or this particular line too much. Okay. Audit evidence is cumulative in nature. Auditor should try to obtain conclusive evidence, but every time it is not possible. So he should at least obtain a persuasive evidence, something that convinces your questioning mind. Correct. Evidence can be obtained from accounting records and other information supporting accounting records. In any situation, if the intended evidence is not available, then auditor should go for alternate audit procedures. So all of these points you have done straight away in the notes. All right. In fact, you have done something more in the notes, because as and when I discussed with you, I realized that I need to discuss few more points to get your base clear. So as of now, these many points with respect to concept of audit evidence will do for me. Okay. Done? Done. Now everyone over here. Tell me, this is just a rough discussion that I'm doing with you, not to be written in the notes. Tell me, I am just writing some audit procedures, and you will tell me why I am doing this. Okay. First, physical verification of inventory. Why I am doing physical verification of inventory? To verify dash of inventory. use the proper audit English to verify dash of inventory. Obviously, to verify whether inventory is in existence or not. That boss, whether this particular inventory exists or not. There is no fake accounting. There should be no fake position. There should be no omission, correct? So whether this inventory is actually there or not. All right. To verify the existence of inventory. Tell me, when I am calculating the cost and NRV of the inventory, then I am doing this to verify dash of inventory. The value, yes, the value of inventory. Very good. To verify the valuation of inventory. Okay, very good. When I am checking whether inventory is correctly shown in the balance sheet under current assets and stuff, correct? Then I am trying to verify dash of inventory, the presentation and disclosure. I am trying to verify the presentation and disclosure of inventory. When I am checking the correctness of finished good, raw material, WIP, that means whether everything is properly segregated. Whether everything is properly segregated and finished goods are recorded in finished goods, WIP is in WIP account, raw material is in raw material account, correct? Then I am trying to verify dash of inventory. Classification of inventory. I am trying to verify the classification of inventory, correct? Tell me, when I am trying to tally the actual stock versus the stock statement to verify that nothing is omitted, nothing is omitted, nothing is omitted, I am trying to verify the completeness of inventory. And I don't know how much you are in touch with practical life, but you may be knowing this, that the big companies, manufacturers, they try to take working capital loan from the bank, the cash credit and overdraft, which is their drawing power based upon their current assets, correct? So I am trying to verify whether inventory has been given as a security against short-term borrowings. Then I am trying to verify dash of inventory. Yes. How much the entity controls the inventory? What are the obligations? So I'm trying to verify the rights and obligation of inventory. Just get the correct English. All right. I'm just doing some rough work. Then I will start my next concept. Come on, continue with this. All right. So I still want to continue this exercise. You are going awesome. Only few students went wrong at few instances, but that also we will clear. Tell me. I am verifying the GST charged on sales, whether it is correctly calculated. So I am trying to verify dash of GST on sales. Okay, yes, I want to verify compliance with laws and all of that is fine, but basically I am trying to verify the accuracy of the amount of the GST on sales, correct? Then the derived objective will be, I will end up verifying the compliance with laws and stuff. That is fine. All right. Measurement word is also fine, Ganesh. Okay. Then let us say I am checking whether sales recorded in financial year 22-23 actually belong to financial year 22-23 or not. Whether sales recorded in financial year 22-23 actually belong to 22-23 or not. Then I'm trying to verify dash. See, for students who don't remember this, it's okay. I'm going to explain. But as of now, I'm just doing an exercise. I'm trying to verify cutoff. Cutoff means whether things have been recorded in the correct accounting period or not. Cutoff on the sales. Okay. Then, let us say when I'm verifying sales invoices and I am trying to obtain confirmation from the customers. You know what? I am trying to verify that whether this sale transaction actually happened or not, whether it actually occurred or not. That is why you verify documents. All right. That is why you try to have a conversation. All right. So I'm trying to verify two things over here. One is the occurrence of sales. And I'm also trying to verify when I take confirmation and if I realize that some sales have not been recorded, all right, then I can also understand the completeness of sales. Correct. Then I am verifying the sales, how much is cash sale, how much is credit sale, how much is the export, how much is domestic sale, whether product wise it has been correctly recorded or not. Then I'm trying to verify the classification, whether things have gone into correct account. Classification means whether things have gone into correct account. All right, whether the accounting is correct or not, where they should have been posted, whether they have been posted there or not. I'm trying to verify the classification of sales. Correct. Then when I am verifying whether sales has been recorded as revenue from operation as per Schedule 3 of Companies Act 2013. So correctly whether it has been shown as revenue from operation. So I'm trying to verify the presentation and disclosure of sales. Can anyone tell me which concept of audit I was touching upon over here? Which concept of audit I was touching upon over here? Yes, concept of assertions. For the students who could not connect with me in the last 7-8 minutes, relax. I am there for you. All right. But I just want you to feel the concept which I'm going to discuss so that it does not just sound like theory. All right. Okay. Now, everyone, what you will do is forget about these examples that I've written over here that we will write later on. Okay. What you will do is you will just leave one line after a concept of audit evidence. You will just leave one line and you will write concept number 4, assertions. For the students who were confused, for the students who could not connect with my discussion, forget about the last 10 minutes or 7-8 minutes. Just focus on what I'm doing now. Concept of assertions. Okay. So tell me, everyone, what do you understand by the word assertion? Just normal dictionary meaning. Tell me, if I do this, that means either the lecture is boring or even if the lecture is interesting, I am very sleepy. All right. That is my assertion. So when I do this, you will ask me, no, What happened, sir? Why are you sleepy? Huh? What happened, sir? Huh? Yesterday night, huh? Why are you sleepy? So exactly, as an auditor, in the same manner, I am auditing financial statements. Financial statements are prepared by whom? By the management. So whatever they have disclosed in the financial statements, I'm going to verify that. So tell me, can I redefine the word financial statements? Can I say it is nothing but management's assertions? Management's assertions about the transactions, balances, and disclosure. Tell me, financial statement is nothing but a collection of management's assertion about the transaction, balances, and disclosures. Yes or no, sir? फाइनेंशियल स्टेटमेंट में और क्या है? यही है ना. It is nothing but whatever management is trying to explain about the transaction, balances, and disclosures. So, boss, please write down. Auditor needs to obtain audit evidence about whatever management is representing about management's representations. That means whatever they are explaining, all right, management's representations in the financial statements regarding what is there in the financial statement. Sir, balance sheet, P&L, cash flow. But if I want to be more specific, what is there in the financial statements regarding TBDs? Transactions, balances, and disclosures. Tell me at the end of the day, what is there in the financial statements? Financial statement is just collection of TBDs, transactions, balances, and disclosures. Right. So whatever management is trying to represent in the financial statement regarding the transactions, balances, and disclosures, either directly or indirectly, that is exactly for me nothing else but assertions of the management. So these are nothing but management's assertions. For the students who are not focusing, let me just put it up in this manner. No, I think this awareness is necessary. I have just typed Control F, all right, assertion, and 69 times it is there in my content book. Let us do the same exercise over here. "51 times it is there in my question bank book. All right. So more than 100 times officially, we are going to use this word assertion. So everyone needs to be focused. And by the end of the concept, everyone will have to confirm whether they have understood or not. All right. So auditor needs to obtain audit evidence about management's representations in the financial statements regarding the TBDs, either directly or indirectly. Very simple. Whatever management is representing in the financial statement, whatever they are explaining about the transactions, balances, and disclosures, I am going to verify that. Whatever they are explaining about the transactions, balances, and disclosures, I am going to verify that. And that means, will you agree with me if I were to say that auditor needs to obtain audit evidence to verify management's assertions in the financial statements? Do you agree with this line? Auditor needs to obtain audit evidence to verify management's assertions in the financial statements. One more time. Auditor needs to obtain audit evidence to verify management's assertions in the financial statements. All right. So we need to just understand now the assertions about transaction, the assertions about balances, and the assertions about presentation and disclosure, and the assertions about presentation and disclosure. Yes, sir. Okay. Which you have already understood. Okay. Just now we just did it practically. I showed it to you. First finish off this working. Okay. Now I showed it to you. Inventory is nothing but a balance in the balance sheet, correct? So whenever we talk about any balance, correct, we are worried about whether that balance exists or not. We are worried about its valuation, correct? We are worried about obviously its presentation and disclosure, classification, completeness. But why I'm reading this so fast, presentation, disclosure, classification, completeness, because these PCC is common whether you're talking about a PNL or balance sheet, correct? But the unique point in balance sheet is this rights and obligation. So whenever we talk about balances, never forget EVR. Existence, valuation, rights and obligation. Forget PVR. Now remember EVR. Existence, valuation and rights and obligation. Otherwise, PCC is always there. Presentation, classification, completeness and stuff. Now, when we talk about transactions, at that point of time, we are worried about its accuracy, the amount at which it is recorded. We are worried about the word cutoff, whether it has been recorded in the correct accounting period or not. We are worried about, all of this is always there. We are worried about its occurrence. OCA. In case of transactions, we are very much worried about OCA. Occurrence, cutoff and accuracy. Otherwise, PCC is always there. Presentation and disclosure, classification, completeness is always there. Let me show it to you. Let me show that from the textbook. Yes. But before I go to the textbook, I want a confirmation. At least this presentation, you are done with this? Yes. Okay. All right. So students are confirming, yes, they are done with that presentation. Look at this concept number 4, assertion. Assertions are representations made by management in the financial statements, either directly or indirectly, about the TBDs, transactions, balances, and disclosures. Assertions about transactions. Okay. Now, whenever you're verifying any transaction, it is all about OCA. Occurrence, occurrence, cutoff, and accuracy. Can you put star besides occurrence, accuracy, and cutoff? These are very important for transactions. So occurrence means whether actually something has occurred or not. Accuracy is the amount, correct? And cutoff is all about the correct accounting period. Otherwise, classification, completeness, presentation, all of that is common. Okay. Then you have assertions about balances. In that, this EVR is very important. Whether actually the balance exists or not. What is the valuation? Now be very careful with your English over here, audit English. If today I sell something to you, this is a transaction. Transaction always occurs. All right. As on 31st March, if that amount is still receivable from you, that is a balance which exists. Okay? So balances exist, transactions occur. Come on, come with me. Balances exist, transactions occur. Okay. Today, the sale transaction occurred at 100 rupees and 18 rupees GST. So 100 plus 18, 118. This is the accuracy of the amount. Okay. Now, as on year end, let us say the recovery from you is doubtful. So I am creating 20 rupees provision. So 100 rupees was receivable from you minus 20 rupees provision. 80 rupees is your value. So in transactions, we verify accuracy of the amount. Whereas in balance, we do the valuation of the amount. One more time. In transactions, we verify accuracy of the amount. Whereas in balance, we do the valuation of amount. I want a confirmation. Are you clear with this? In transactions, never use the word valuation. And in balances, don't use the word accuracy. Otherwise, you will mess up with your English. In transactions, never use the word existence. It's occurrence. And in balances, never use the word occurrence, it is existence, because they exist as on year end. All right. Now, in case of balances, it is all about assets and liabilities, so rights and obligation is very clear. In case of transactions, it is very important that till 31st March, that cutoff is adhered to. So correct accounting period. And obviously, we need to be also worried about events occurring after balance sheet date, which are adjusting events, non-adjusting events. All right. So whether things have been recorded in the correct accounting period. So when it comes to transaction OCA, and when it comes to balances EVR, these are the unique points. Otherwise, PCC is common. What is PCC? Presentation and disclosure, classification and completeness. Classification is correct accounting. Completeness means there should be no omission. Presentation and disclosure is everyone very clear with that. Okay. I want a confirmation for transactions and balances. Are you done with that? Yes or no, sir? Yes. Listen, if you see my textbook, I have not highlighted anything over here in assertions about presentation and disclosure. It is given as a separate category, but I have not highlighted anything. Why, sir? I just forgot. No, intentionally this was kept in a normal font without any highlight. Because, tell me, whatever you do in your balance sheet and P&L, can I say you write notes to accounts for that? Yes or no, sir? Yes, sir. So in presentation and disclosure, you don't have to remember anything unique. Whatever you are doing for transactions and balances, for that you are going to give the presentation and disclosure. So that is why in presentation and disclosure, you will see that every assertion is written over here. Look at this. Occurrence, rights and obligation, accuracy, valuation, classification, understandability, completeness. Basically everything you can write over here. Because whatever we are going to verify in balances and transactions, for that we will obviously see the presentation and disclosure. All right. Now, why we are doing this topic? Because at any point of time, whenever auditor is performing any audit procedure, it is always to verify a specific assertion. One more time. At any point of time, whenever auditor is performing any audit procedure, it is always to verify a specific assertion. So when I am teaching bare essays and we are discussing any audit procedure, you should always remember this. Okay, we are doing this for dash assertion. We are doing this for dash assertion. Okay, we are doing this for dash assertion. Because in essay 501, just giving examples, you will see about physical verification of inventory. So tell me, that is being done to verify the existence of inventory. So that English needs to come to your paper. In essay 550 related parties, they will continuously focus upon, whether related party transactions have been shown in the notes to accounts, in the balance sheet, in the P&L, whatever it is, but they will continuously focus upon the presentation disclosure of related party transactions. So that you should feel that discussion. All right. In essay 540, auditing accounting estimates, it will be all about valuation of estimates and presentation and disclosure. Are you with me? Yes or no, sir? Hello? Yes. So tell me, are you going to forget this concept of assertion? Never, never, ever in audit subject. You cannot forget this concept of assertion. All right. Because otherwise you will never connect with the bare essays. Okay. So auditor needs to obtain sufficient and appropriate audit evidence by applying various audit techniques to verify management's assertions in the financial statements. A couple of years back, there was this meme material which was very famous. The kids, and the legends. All right, the kids, boys, and legends. Correct. So, kids are going to say, auditor needs to obtain audit evidence to form and express an opinion on the financial statement. But the legends are going to say that auditor needs to obtain audit evidence to verify management's assertions in the financial statements, so that he can form an opinion on the financial statements. I hope you want to be part of legends and not just kids over here. Yes, legends. Yes. Okay. So always say, The auditor needs to obtain sufficient and appropriate audit evidence to verify management's assertions in the financial statements. Otherwise, I am just going to call you a kiddo. All right. So if you don't want to be called as a kiddo, then grow up and use language like legends are going to use. Okay. So I hope you are done with this. If you want, you can write down some examples. What you're going to do now is assertions about transactions, balances, and disclosure over here. You will write refer textbook. Okay. Refer textbook. What is this? Page number 10. Okay. After that, leave one line and you can just write down examples. Assertions about balances. And you can write these examples. Copy this, please. Okay. Any point number that you are not understanding, you can type it in the chat box. For the students watching recorded video, I am giving this time to copy so that your duration is not utilized, in doing that rewind forward, rewind forward. Okay. Tally actual statement versus stock statement. Why are we doing this? To verify the completeness of inventory. Whether inventory has been given as security against short-term borrowings. This is to verify the rights and obligation of the inventory. So in audit subject, whenever we are performing any procedure, it is always for a specific assertion. Okay. Now write down examples. Assertion about transactions, the assertions with respect to transactions that you are verifying. All right. So audit procedures and why you are doing this. Audit procedures and why you are doing this. Okay. So I am dictating audit procedures and why you are doing this. First, verifying the GST charged on sales, whether it is correctly calculated. Verifying the GST charged on sales, whether it is correctly calculated. This is to verify accuracy of GST on sales. To verify accuracy of GST on sales. Okay. Second, whether sales recorded in financial year 22-23 actually belong to 22-23 or not. Whether sales recorded in financial year 22-23 actually belong to 22-23 or not. You can eliminate writing this to verify. Correct. That is common. You can just write the main line, cut off on sales. Cut off on sales. Okay. Third, verifying sales invoices and confirmation from customers. Verifying sales invoices and confirmation from customers. To verify occurrence of sales, to verify completeness of sales. So occurrence and completeness of sales. Occurrence and completeness of sales. Okay. Then you can just write verifying the bifurcation of sales. Bifurcation of sales. If you want, you can write this cash, credit, export, domestic, but that is too much to write. So you can just use the word bifurcation. This is to verify classification of sales. What do you understand by the word classification? Whether it has gone into correct account or not. Classification of sales. Then next, verifying sales is revenue from operation as per Schedule 3 of Companies Act 2013. All right. Whether it has been shown as revenue from operation as per Schedule 3 of Companies Act 2013. This is to verify P and D of sales, presentation and disclosure. Presentation and disclosure. Okay. Chalo, then let us move ahead in the lecture now. We are done with the concept of AFRF. We are done with the concept of materiality. We are done with the concept of audit evidence. We are also done with the concept of assertions. All right. Now, some more words, some more concepts. Please write down concept number 5, everyone. Audit procedures. And I have seen that this is the topic which many students leave it in option at inter-SEA level, and they are not very clear with the language and stuff. That creates a lot of problem. So when I talk about audit procedures, what is it? That what process auditor is going to adopt? Oh no, when he's conducting audit, correct? So the process that is followed by auditor. Tell me, come on, people who are into practical life auditing also tell me, straight away, if I get audit of X Limited, which is a manufacturing entity, straight away, am I going to start verifying purchase, sales and everything? No, na. First, I need to, yes, conduct some walkthroughs, obtain an understanding of their business. Yeah. You are doing this in articleship, but that sad story is that no one is writing it properly in the answers. Correct. So first, we need to obtain understanding of their business. Then we need to obtain an understanding of their systems. Then we can understand what can go wrong, how much can go wrong, where there could be error, where there could be fraud. After that, we can go ahead. All right. So the very first procedure that auditor needs to perform is the risk assessment procedure. And in that also, the very first step that auditor needs to take is, first you obtain an understanding of the client's business. All right. So down arrow, write down. In any auditing situation, no matter whichever audit it is, no matter whichever entity, correct? The very first thing that you're going to do is, listen, there is a way of writing this. Huh? Over here, you please leave 2-finger space. All right. 2-finger space. Okay. Because we will do the marking on the left-hand side also. Okay. So as an auditor, in any auditing situation, I need to obtain an understanding of the entity and its environment. That means obtain knowledge of client's business. Tell me, why do I need to obtain knowledge of client's business? Because can I say everyone will type a yes or no? Can I say I need to know that how management is acting as a leader, how they are operating, correct? I need to know that how they are getting the maximum out of their business, correct? How they are approaching the customers, yes or no, sir? No, sir. What yes? Is this an MBA class going on? Huh? leader, customer. This is audit lecture going on. This is exactly where students go wrong. They don't connect with the concept as an auditor. I'm trying to obtain understanding of the entity and its environment. I'm trying to obtain knowledge of client's business so that I will come to know what can be expected in the financial statements. So that I can come to know what can go wrong. For example, if I go to some departmental store, correct? In a departmental store, you have to purchase the goods, you have to pay the money there and there itself and finish it off. And if I'm auditing a departmental store and I ask them, listen, can you please give me the data of your trade receivables and provision for doubtful debts? That person is going to slap me and he's going to doubt my chartered accountancy degree. Tell me, in a departmental store, are you going to get trade receivables and provision for doubtful debts if that store is completely running on cash model? No, sir. So you need to obtain understanding of the entity and its environment, knowledge of client's business, so that you can understand what to expect in their financial statements. Please, you need to talk like an auditor. You need to connect with the concept like an auditor, because you will realize it later on that on this particular line itself, later on, we will have around 6 to 7 questions. Yes, you heard me correct. And that is why it is important that when I'm teaching the base, from there itself, you connect with the concept. So I will make you write something about this particular line. So what you can do is just write number 1 over here, because I will draw the main chart and then after the chart, we will write some supporting notes. So obtain an understanding of the entity and its environment, that is knowledge of client's business. Okay. Down arrow. Once you obtain understanding of the entity and its environment, knowledge of client's business, Khushi, I'm so happy that you wrote that, this will help us in understanding internal controls. But beta, that is not correct. You were almost near, all right. Because when you're trying to obtain understanding of the entity and its environment, I am just trying to understand the kind of transactions, balances, and disclosures that I can expect and what can go wrong in their financials, correct? Now, I am going to evaluate the accounting system. So Khushi, this is the step where you try to obtain understanding of their controls. I am going to evaluate the accounting system and related internal controls. Now, if I talk about Air India, everyone understand aviation is their operation, correct? So you can understand what kind of transactions you will expect in their financial statements. And can I say that when you are trying to obtain further understanding, okay, you will try to, obviously in case of Air India, you will try to obtain understanding of their accounting system and related internal controls, like how tickets are booked, all right, how payments are done, what kind of charges they have to bear, what is, who authorizes it, all right. How is their computer system connected across the globe, all right. Can I say you will be worried about these things, yes or no, sir? Yes or no, sir? Yes, sir. Can I say you will also be worried about their flight scheduling, which flight takes off at what point of time, when it is landed, how do they manage their flight schedules? Can I say you will be also be worried about the flight schedules, yes or no, sir? No, sir. Exactly. You know this concept, but it does not reflect in your answer. You know what final say students are writing in the paper? Auditor should obtain understanding of the overall internal control system. Chi, as an auditor, am I worried about the overall internal control system? No. Today, if you are conducting audit of my coaching classes, will you be worried about the quality of portion completion? No. Will you be worried about my customer satisfaction? No. But will you be worried about the admissions, the GST and stuff? Yes or no, sir? Yes. So, boss, yes, that concept needs to show in your paper. Why you are loose when you are writing the answers? Practical life, everyone is so serious, but why not in the paper? So you need to evaluate the accounting system and related internal controls. Be careful about the words that you're writing. In costing and FM and stuff, you're so careful. Sir, are we supposed to round off till 4th decimal or 5th decimal? 4th decimal is okay, no? In audit, Sorry, if we know the references, will we get the marks if we don't know the points? Look at the amount of the disparity over here. Right? So you need to be a little bit more concerned about what you're writing. So I'm going to evaluate everyone from here on. We need to write this, everyone. We are going to evaluate the accounting system and related internal controls. Yes, Ishan, very good. We are worried about internal controls over financial reporting, IFCFR, very good. So we are worried about evaluating the accounting system and related internal controls. Am I clear with this? Yes or no, sir? Yes, sir. Okay. In whole audit subject, you will see this relevant controls, relevant controls, relevant controls. You will never see the word overall internal control system. Never. Mark my words. Read all the essays. You will never see this word. Okay. Then, after we have understood the business, correct? So wait, I'll make you write something over here also. Okay. After we have understood the business, and after we have analyzed their accounting system and related internal controls, then we get a fair bit of idea about what can go wrong, how much can go wrong, where things can go wrong due to error, where things can go wrong due to fraud. So after I'm done with these two steps, I can identify and assess. Yes, the room. Very good, Khushi. Risk of material misstatements. Risk of material misstatements. Whether due to error or fraud. Whether due to error or fraud. What can go wrong? How much can go wrong? Where there could be error and where there could be fraud. What can go wrong? How much can go wrong? Where there could be error and where there could be fraud. So identifying and assessing risk of material misstatement, whether due to error or fraud. And once we are done with this, then we can finally decide that what are we going to test, how much we are going to test, when we are going to test that. All right. So after we are done with this, listen, again, you are going to leave 2 finger space. You will continue that. You will draw one line also over here. Okay. The above procedure helps auditor in determining the nature, timing, and extent of further audit procedures. The above procedure helps auditor in determining the nature, timing, and extent. Nature, what am I going to do? Timing, when I will do it. Extent, how much? Yes. But for every single line, I will make you write something. Listen, we need to do a little bit of decoration. So for this risk of material misstatement, third point. I mean, you can use normal ink. I was just trying to highlight. Okay. And this full procedure, obtaining an understanding of the entity and its environment, that is obtain knowledge of client's business, evaluate the accounting system and related internal controls, identify and assess risk of material misstatement, whether due to fraud or error. All right. So all of this, when it comes together, this is nothing but risk assessment procedure. As per SA 315. Risk assessment procedure as per SA 315. And once auditor is done with risk assessment procedure, then he can decide about the further audit procedures. Have you heard about this in inter-CA? Do you remember this at least? TOC, test of controls, TOD, test of details. Do you at least remember these words? I'm not saying that whether you are an expert of these words or not, but do you at least remember these words? Yes, 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 yes. All of that is nothing but what? Further audit procedures, correct? But that will depend upon risk assessment procedures. Okay. So now everyone over here, we are going to be an expert in essays, and that is the only objective that you should have. So further audit procedures are divided into two parts. Further audit procedures are divided into two parts. One is compliance procedure. In another words, TOC, test of controls. And on the other side, we have substantive procedures. Substantive procedures. Substantive procedures are further divided into two parts. Test of details and substantive analytical procedures. First you write this, then I will start explaining. Please write down this much. Compliance procedure, test of controls. On the other side, substantive procedures. Substantive procedures are divided into two parts, test of details and substantive analytical procedures. Okay. Have you at least written this small bifurcation? Yes. Now, come on, man. Everyone is aware about this. TOC and then TOD. Test of controls and test of details. So when you were conducting audit of Air India, first you understood, okay, what is your revenue booking system? Okay, for tickets booked through agent commission system. Okay. Then the taxes that you are going to charge, you have a software for that. All right. And then what is the refund system? Okay. This was risk assessment procedure. You were just obtaining an understanding. All right. Now you're going to test, you're going to examine. Okay. So you're going to take some transactions. You will see whether the whole system has been followed or not. Whether the authorization was done or not in case of refunds. All right. Whether the system is automatically calculating the agent commission and remitting it to them. All right. So now you're going to actually test. Be very careful in MCQs and writing your answers. Huh? When I am evaluating the accounting system, that is risk assessment procedure. But when I am testing the controls, all right, so that is further audit procedures. Focus upon my English very carefully. In risk assessment procedure, tell me in my whole English of risk assessment procedure, did I use the word test? Did I use the word test? No. Test, examine, verify, check whether. These words will kill you. They will give you 0. In risk assessment procedure, I always obtain an understanding. I try to evaluate. I try to identify. I try to assess. All right. Because after this, I will start my testing. In further audit procedures, you will see test, check, verify, examine. You will see these words. All right. So auditing is a game of words. All right. Because Game of Thrones was very forgetful last season. So now focus on Game of Words. All right. So test of controls. Head on. Auditor needs to test the operating effectiveness. Come on, man. Come on. Grow up, level up. Don't use such language. Auditor needs to test whether the controls are operating effectively or not. Whether the controls are functioning properly or not. Auditor needs to test the operating effectiveness of relevant controls. Don't just write controls. Relevant controls. Auditor needs to test. Otherwise, you become like an internal auditor. If you're going to test their overall internal control system. No, we don't do that. Auditor needs to test operating effectiveness of relevant controls. All right. Whether these controls are operating effectively or not. In that, I will verify existence, effectiveness, continuity of controls, but I'm not making you write so much as of now, because that when we go to the relevant essays, we will do it. Give me the correct English now. Let us say that you saw that some controls were not followed properly. All right. So refund was done without authorization. That means you have found dash. You have found dash. In normal English, we say we found an observation. But technically, when the controls are not followed, the audit English is you have found deviation. Very good. Yes. Dhruvin, Nishika, very good. You have found deviation. Yes, Rakshak. A little bit different in your word, but very clear. All right. You have found a deviation. Okay. So auditor needs to test the operating effectiveness of relevant controls in order to identify whether there is any significant deviation. Yeah. Today you're getting the feel of the subject, that what kind of words you're supposed to use, whether there is any significant deviation. This is just ABCD. When we go to bare essays, I want you to be master of everything. Okay. Test of details. When I'm going for test of details, all right, I will see the amount, the accounting, the presentation, disclosure, correct? So I'm going to perform that document examination, that verification, that is technically called as vouching and verification. I'm going to perform vouching and verification to verify ACPD. Amount, classification, presentation, and disclosure of. I'm not going to run behind all immaterial items. My major focus will be to verify the material items. So I'm going to perform vouching and verification to verify ACPD of material items. And if there is anything wrong in ACPD, if ACPD goes wrong, then I have found dash. Come on, this is very common word. If ACPD goes wrong, that means I have identified a dash. Misstatement. Very good. Yes. You can use this full line now. In order to identify material misstatements, if any. In order to identify material misstatements, if any. Okay. Yes, sir. Just a minute. I'll just draw this line over here so that we don't go wrong. Now, what is this analytical procedures? Ratios, comparisons, trend analysis. Obviously, yes. But today I'm going to clear a very big point and everyone needs to focus over here. Tell me, I'm just writing it over here. This is just for my reference. Okay. I'll make you write, but at an appropriate stage, not now. Let us say that in X Limited, you did a trend analysis of last 5 years. And you saw that profits are declining and managerial remuneration is increasing. You also saw that the company is borrowing at an average rate of 8% and lending at 7.2% on an average. Tell me, Does this indicate that something is going wrong over here in X Limited? Yes or no, sir? Yes or no, sir? Yes. Something is going wrong over here? Yes. This trend analysis, ratio analysis that you are doing, this is nothing but what? Analytical procedures. Tell me. Now answer my question very honestly. By performing this analytical procedures, let us say you are conducting audit of financial year 22-23. Tell me, by performing this analytical procedure, were you able to verify anything of 22-23? Were you able to verify any item of 22-23? No. Were you able to verify anything of 22-23? No, 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 no. But can I say that by performing this analytical procedure, you found out that there is a risk of material misstatement, a risk of fraud in the financial statements of 22-23? Yes or no, sir? Yes or no, sir? Yes, sir. So now I'm going to teach you a very important point. Analytical procedures can be performed as risk assessment procedure, and analytical procedures can also be performed as substantive analytical procedures. Here, with this example, I have proven it to you that how we can use analytical procedure for risk assessment. So there is a very big misunderstanding amongst the students that analytical procedure is performed only at the testing stages of audit. No, 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 no. Many a times, analytical procedure is performed at the beginning of the audit to find out risk of material misstatement. Let me tell you, analytical procedure is a technique. It can be used as risk assessment also. It can be used as a substantive analytical procedure also. Let me give you an example of substantive analytical procedure. So when you are conducting audit of financial year 22-23, tell me, if I give you the figure of turnover, will you be able to guess the GST? Yes or no, sir? Yes. Tell me, if I give you total employees versus and there's salary rate and stuff, can you compare it with the total payroll cost? Yes. Now, congratulations. This you have understood that analytical procedure, how we use it at the testing and completion stages of audit. So analytical procedures can be performed as risk assessment procedure at the beginning of audit to find out risk of material misstatement, and it can also be used along with the test of details and at the completion stages of audit. All right. That is why when I wrote analytical procedures over here, you see, I did not write just analytical procedures. I wrote substantive analytical procedures. It means using ratios, comparisons, trend analysis during the testing and completion stages of audit. Using ratios, comparisons, trend analysis during the testing and completion stages of audit. All right, but I will make you write this as a separate note also. So you please write down number 4 over here. Why number 4? 3 points I'll make you write for the above 3 discussions. Then test of control, test of details, you have written it over here itself. And then for substantive analytical procedure, I'll make you write one note. Right? So point number 4 over here. So this whole compliance procedure, test of controls, test of details, substantive analytical procedure, all of this is nothing but what? Auditors' further audit procedures. And technically it is called as auditors' responses to the assessed risk. Technically it is called as auditors' responses to the assessed risk. Now, there are two categories of students. One who will get frustrated with the language. Second, who will take some effort to understand the language. For the first one, I can only refer them to motivational speakers. For the second one, please continue to attend the lecture. All right. So listen to me. First, auditor has assessed the risk. What can go wrong? How much can go wrong? All right. And then he responded to the risk. All right. And that is why this whole topic of further audit procedure is technically called as auditor's responses to the assessed risk of material misstatement. And this topic is discussed in essay 330. However, substantive analytical procedure has been given a separate importance, and it is separately discussed in essay 520. All right. Complete it, please. Okay. I want a confirmation. Have you written these notes? Yes. Come on. Yes. Okay. All right. So we have written this much. And then we will write some supporting notes now. But tell me, if I just want to give a snapshot of the whole topic, although you won't be able to read this, all right, because it's I've shrinked it too much. All right. But tell me, this full topic is nothing but first, you will assess the risk. All right. What can go wrong? How much can go wrong? Where there could be error? Where there could be fraud? And then accordingly, you are going to respond to the risk by performing further audit procedures. So tell me, will you agree with me if I write this? That essay 315 plus essay 330 plus essay 520, all of this, when it comes together, it is nothing but audit procedures in order to obtain sufficient and appropriate audit evidence to verify management's assertions in the financial statements about various transactions, balances, and disclosures. Yes, Muskan. So tell me, everyone, do you really connect with this particular line? Audit procedures in order to obtain sufficient and appropriate audit evidence to verify management's assertions in the financial statement about various transactions, balances, and disclosures. This one line is bloody my last 60 to 70 to 80 minutes of discussion. That audit procedures in order to obtain sufficient and appropriate audit evidence to verify management's assertions in the financial statement about various transaction balances and disclosure. Tell me now, do you understand every inch of this line? Yes or no, sir? Yes, sir. Okay. Now, we need to write some supporting notes. Otherwise, we will lose the effort. We will lose the whole effort will be a waste. So first, obtaining an understanding of the entity and its environment, knowledge of client's business. Write down. Supporting notes. First point. Okay. We need to obtain knowledge of client's business in order to understand the TBDs expected in the financial statements and what can go wrong in the financial statements. We understand these two things. Like, for example, DMart. I can understand that, okay, we can expect inventory. We can expect various segment sales, cash sales mostly. And because there is a high cash turnover, there is a chance of misappropriation of cash, misappropriation of inventory. So I can understand that TBD is expected in the financial statements and what can go wrong in the financial statements. Okay. Second note about the accounting system and related internal controls. Write down. No? I'm just changing ink just for your focus. Huh? You need not change the ink so many times. Auditor needs to evaluate the internal controls relevant to audit. That is related to preparation and presentation of financial statements. Relevant to audit, that is related to preparation, presentation of financial statement. Auditor is not concerned about the overall internal controls, or to be very specific, the internal controls which has nothing to do with accounts. All right. Okay. All of this will be expanded at a later stage also. Okay, so this was my rough working for analytical procedures. Then you can write down the third note. Listen, don't forget the link. Huh? Number 3 was over here for risk of material misstatement. There is a very important concept that I want to teach now. Right now. While identifying and assessing the risk of material misstatement. So when auditor is identifying and assessing the risk of material misstatement, auditor should analyze ROMM at 2 levels. Auditor should analyze ROMM at 2 levels. Now this is very good. ROMM at assertion level, ROMM at overall financial statement level. Slowly, steadily, you will understand this English. Assertion level means what can go wrong, how much can go wrong in that particular assertion. For example, let us say everything is maintained in a very automated manner. However, inventory maintenance is manual. So tell me, is there a risk of fraud in the overall financial statements? Is there a risk of fraud in the overall financial statements? No. But tell me, is there a risk of misappropriation in the inventory? Is there a risk of misappropriation in inventory? Yes. So this information that you have obtained, this helps you to analyze ROMM at the assertion level. That okay, everything else can be fine, but at least inventory seems a little bit more exposed to misappropriation. All right. So when you are trying to obtain an understanding of the client's business and evaluating the system, you may find 2 types of risk. Some situations which may just show that, okay, this particular item can go wrong. And some situations which can indicate that overall financial statement may be manipulated. For example, let us say 90% of the transactions of the entity are with related parties. Now, come on. You are at finance level. You know that transactions with related parties are the biggest instrument for evading tax, for manipulating the financials. So tell me, when you came to know that 90% of the transactions are with related parties, don't you think that you will be worried that here there is a risk that overall financial statement could be manipulated? Yes or no, sir? Yes, sir. Let me give you more examples. Let us say in the salary calculation, it is outsourced to another entity. Do you expect that there could be some clerical errors in the salary calculation? Yes. Yes. But does that show you that the overall financial statement could be manipulated over here? No, 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 no. But yes, I do expect that there could be some clerical problems in the salary calculation. So you came to know about RMM at assertion level. Acha, have you seen this in a small company? There is one accounts manager who is looking after everything, the entries also, the finalization also, and there is no one else to question him. Even the directors are not aware about what is going on. Correct. Have you seen this in small companies? You will see one person with too much of authority, with too much of power. Yes. No one else to question that person. What does that indicate? That can I say that that single person can manipulate the overall FS? Yes or no, sir? Yes, sir. Exactly. So listen to me. Risk of material misstatement at assertion level. That means the risk of error or fraud in individual assertions of the transaction balances and disclosures. Example, manual records of inventory indicating risk of misappropriation in inventory. What, your hands are aching, paining? But you will be happy that your hands are paining for the right reasons. All right. So risk of error or fraud in individual assertions of the transaction balances and disclosures. So this is my style. We keep on discussing and we keep on writing. Otherwise, you will doze off. Risk of material misstatement at overall financial statement level. Okay. Risk of error or fraud in the overall financial statements. Example, 90% of transactions with related parties. Second example, there is no segregation of duties in finalization of accounts. Third example, entity has applied for investments in Shark Tank India. Whenever entity is looking for investments, they will go for rampant overvaluation across the overall financial statement. Correct? And they're applying for listing and this and that and stuff. Okay. So risk of material misstatement at assertion level and overall FS level, you need to do this analysis. Okay. Now, fourth note about that analytical procedure. Yeah, which I did the rough work over here. Okay. I'll just write this is rough work. Otherwise, students will just, when they're looking at the PDF, they'll be confused that all of a sudden, what is this in between? Yes, fourth point. Analytical procedures can be performed as risk assessment procedure, and analytical procedures can also be performed as substantive analytical procedures. Okay. Both of them can be explained with an example. Trend analysis of last 5 years. Profits are declining. Managerial remuneration is increasing. Hello, this is real life example of IL&FS company, huh? Big Fours, Big Chores, Big Fours. You can ask your partners, all right? Profits are declining, managerial remuneration is increasing. The only person who is hardworking in Big Four is article. Everyone else is just managing relationship with the client. So company is borrowing at 8% and lending at 7.2%. What is this? All right. This trend analysis indicates risk of material misstatement due to fraud. Because company wanted to borrow more funds, so they were manipulating the financials also, because by manipulating the financials, they can get good credit rating, and the whole borrowing of the company depends upon the credit rating. Okay. So there is a risk. This is clear indication of risk of material misstatement due to fraud and a risk of material misstatement in the overall financial statements. But you know, Big Four auditors, they are the most innocent person on Mother Earth. They are people from Satyug, you know, who are operating in Kali Yuga. So sometimes they forget this. Okay. Done? Done. So analytical procedures can also be performed as substantive analytical procedures. All right. Example, GST turnover relationship of the period under audit. This is all testing stage, you know. Then you do that consumption analysis, na? Cost of goods sold, purchase, sales, all right, that consumption analysis. Salary versus total number of employees, and what is the average salary paid to them, etc., etc. You will see lots of examples later on. Okay. So listen to me. When analytical procedure is performed as risk assessment procedure, you will see this discussion in essay 315. But when analytical procedure is performed as substantive analytical procedures, you will see this discussion in essay 520. All right. I want a final confirmation from everyone. Is everyone through with the full note of audit procedures? Risk assessment, further audit procedures. These words, please don't forget here. Everyone says in the first couple of lectures that, sir, we will not forget, but then later on there's a problem. You know, consumption analysis is Khushi. How much material has been consumed, how much was purchased, correct? So, and how much was, how much was taken into the production. In big companies, you do this all consumption analysis and stuff. How much is the good? How much is the inventory? So that much was taken for consumption. So you derive that particular figure. Okay. You do this in costing. Yes. Just a minute. Huh? Chalo. Now everyone please come to the textbook. Concept 5, audit procedures. We have written much more than what I have given over here. All right. Just for your better understanding. Okay. So for this full topic, now you can write notes. Risk assessment procedure, further audit procedure, and everything we have written over here. I mean in the notes. Done? Done. Okay. Now, because we have discussed the concept of audit procedures, this is the perfect time to discuss the concept of audit risk also. All right. So everyone now, please come to this concept of audit risk. Please write down in your notes. Write down, please. Concept number 6, audit risk. Concept number 6, audit risk. Okay. First of all, before I go ahead in this concept, what do you understand by the word audit risk? It's the risk of expressing wrong opinion. But that is a very half-cooked, half-baked definition, correct? We need to get into the exact technical words. But before I go ahead in the technical language, I want everyone to write this. Okay. We are just doing a rough work. Reality versus your audit report. What is the worst nightmare that you can think of? That in reality, financial statements are materially misstated. They are materially misstated. And in the report you saw, you wrote that financial statements show a true and fair view. This is TNF, true and fair view. Because this is rough work, I am not writing the full form. But then if it confuses you, then let me write. Financial statements show a true and fair view. Can I say that this is the worst possible nightmare? Yes or no, sir? Yes, sir. Yes, sir. That financial statements are actually materially misstated. But you wrote in the audit report that financial statements are showing a true and fair view. Correct. This is the worst possible nightmare. And this, you can also feel that, yes, this is practically possible. Sometimes we have seen these cases in the public also. There are case studies in the public domain also where these things have happened. All right. So with the first point, everyone can practically connect. But let me write the reverse. Let us say that the reality is that financial statements are not materially misstated. And you wrote in the report that financial statements do not show a true and fair view. Do you really think that the second possibility is actually possible in practical life? Where actually financial statements are not materially misstated, and you wrote in the report that financial statements do not show a true and fair view. Do you really think that this point number 2 is practically possible? No, sir. Because when someone is good and you tell that person, you're a very bad guy, very bad person, very dishonest, then the person that other person is going to react in the loudest possible manner. You know what? I'm a good person. I'm very honest. I will show you the evidence, mate. You told me that I'm a bad guy, I'm dishonest. That person will give you the best possible explanations. Similarly, in this audit life, if you write that financial statements are not showing a true and fair view, can I say that first the draft reports are discussed with the management? Yes or no, sir? The draft reports are discussed with the management? Yes or no, sir? Yes, sir. Do you really think that if financial statements are not materially misstated, and if you write this in your report, do you really think that they will accept that particular report? No, sir. They will give you the evidences. They will show you the proof that, auditor, you are wrong. And that is why we do understand that this possibility is insignificant, or just to say it is not probable, considering the practical life. Correct. But tell me, when someone is bad and you tell that person, you're a very good guy, you're a very good guy, you're very honest, then that person is just going to smile. Thank you. That you will come to know later. Thank you. So we do understand that the first one, where financial statements are materially misstated, and you have written that financial statements are showing a true and fair view. All right. This possibility does exist. Very much practically possible. All right. That is why, you know what is the full definition of the concept of audit risk? That is why we say that audit risk is a possibility that auditor may express an inappropriate opinion when financial statements are materially misstated. Most of the students commit the mistake that they just write this much. They put a full stop over here. If you just write that audit risk is a possibility that auditor may express an inappropriate opinion, that means you are covering both the possibilities, possibility 1 and 2 both. But that is wrong, because possibility 2 is just not practically possible. So tell me, what is the full definition? Audit risk is a possibility that auditor may express an inappropriate opinion when financial statements are materially misstated. When financial statements are materially misstated, that means we consider possibility 1 and ignore the possibility 2. I want a confirmation. Is everyone with me over here? Yes or no, sir? That audit risk is a possibility that auditor may express an inappropriate opinion when financial statements are materially misstated. Yes, this is the full definition. Yes, sir. Yes, sir. You have to write this much. You first write this much, then I will go ahead. I have to draw one diagram also. Okay. So now let us come to a point where we can end the lecture nicely so that we can continue tomorrow. But we need to write something to end the lecture on a good note. So tell me, everyone. Now the rough work that I'm doing, you need not write this. All right. So tell me, everyone. If I talk about DMart, okay. When you tried understanding the business of DMart, okay, the first thing that comes to your mind is, can I say there is a risk of cash misappropriation and inventory misappropriation? Yes or no, sir? Yes, sir. Okay. So we know that in DMart, cash and inventory are exposed to misappropriation. Okay. Then, obviously, for that, management has implemented internal controls. There's a daily cash count. Then whatever cash is deposited today, tomorrow it is deposited. Whatever cash is collected today, tomorrow morning, first thing it is deposited in the bank. All right. There is a van which comes from the bank and they take the money and they deposit it nicely. It is done. Then inventory also, they reconcile the stock, and after the store is closed, they reconcile the stock, and then later on, they go to their houses. So their employees are not allowed to leave before they reconcile the stock and stuff with the collection that has been done. So yes, it's a good system, but every system has loopholes. What if the inventory manager, the cash manager, the accountant, what if they shake hands? All right. And what if, if they come together, they can manipulate the controls? Yes. So we do understand that there is a risk of control failure due to collusion. Sir, what is collusion? Secret understanding between two parties. Secret understanding between two parties. Correct. Now, tell me, when these two things happen together at once, just using one line in Hindi, जब ये दोनों साथ में होता है, when these two things happen at once, then can I say that in that particular DMart store, the figure of cash and inventory will be misstated? Yes or no, sir? Yes, sir. See, if cash and inventory are exposed to misappropriation, but if the control does not fail, then finally in the accounts, there won't be a misstatement because the control will catch it. So when the financial statement will be materially misstated? When two things happen at once, when cash and inventory are exposed to misappropriation and control also fails. All right. Then in these two cases, it can lead to risk of material misstatement in the financial statements of DMart. All right. It can lead to material misstatements. Now comes the auditor, the hero, the heroine, the hero, yeah, auditors. But when auditor performs audit, obviously even auditor performs on sampling basis. He may not be in a position to cover every single DMart store also, correct? Because looking at the operations of DMart. So it is also possible that audit procedures may fail. Yes, it is possible that audit procedures may fail to detect such misappropriation. Let us say if auditor detects misappropriation, then finally things are still good. At least auditor will be able to write in his audit report that, okay, boss, there was so much of amount of misstatement and stuff. But tell me, finally, when the audit report will go wrong, when the misappropriation actually happened and auditor fails to detect such misappropriation. So when these two things happen at once, happen together, then auditor will end up expressing an inappropriate opinion. It will lead to expression of inappropriate opinion because auditor has failed to detect material misstatement. All right. Why I wrote practically? Because from the practical life, I will show the technical words. So whenever you are understanding any entity, after understanding the business, you come to know about what can go wrong in that particular business. I'm not talking about their business risk. I'm talking about what can go wrong in the transactions, balances, and disclosures. Now, can you eliminate cash and inventory risk of misappropriation in case of DMart? Can you just completely eliminate that risk? Can you bring it to zero? Can anyone on Mother Earth bring it to zero? No, sir. So this is nothing but what? Inherent risk. It just comes with the business. In order to reduce the impact of this, management implements internal control. But then no control on Mother Earth is foolproof. Even if you bring Tata company in front of me, still there is a risk of control failure. So this is nothing but what? Control risk. When both of these risks, when they happen together, all right, it can lead to risk of material misstatement in the financial statements of DMart. Okay. However, the last savior was auditor. But even if auditor fails to detect, and which is very much possible because of our limitations, okay, then this risk is called as detection risk. And the final nail in the coffin, when risk of material misstatement and detection risk, when both of them happen together, then it leads to audit risk. This was just the practical life explanation. Tell me, everyone, are you writing this with me? No, sir, you ask us not to write it. Yes. So, inherent risk means risk of transaction balances and disclosures being exposed to some kind of error or fraud. Control risk means risk of control failure. When both of them come together, when both of them happen together, it can lead to ROMM, correct? And when auditor fails to detect it, correct, then that is detection risk. And finally, it leads to audit risk. So this is the practical life example that I've set up over here. I will make you write tomorrow in technical language, and I will teach you the relationship also. It is very important for me that you join at 7 o'clock sharp. Otherwise, you may miss out on some really critical discussions and some really very good MCQs. All right. Okay. So if anyone wants to take down this for practical life, you can write it. But tomorrow, obviously, I'm going to draw this diagram in technical language. Thank you so much.